Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm Emily Parker, filling in this week for Christine Lee. Joining me is my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn. Hello, Lawrence.
Good morning.
Okay, let's first take a look at Bitcoin. So the CoinDesk Bitcoin price XPX index is currently trading at $47,826, currently down almost 4%. Currently down almost 3%. The CoinDesk Ether price ETX index is currently trading at $3,154. And the DFX CoinDesk DeFi index is currently trading at $654. Lawrence, what's going on in the markets today?
Well, obviously, we're seeing a bit of a pullback, and it's not just because of Charlie Watts, although we're all pretty upset about that. There was some movement in the past few hours, though, of some about $1 billion and change worth of Bitcoin leaving its leaving Coinbase, and we don't know where it's going. So we're keeping an eye on that stuff right now.
And we have some news coming up this week. We have Fed Chair Jerome Powell is supposed to be speaking on Friday. We don't really know if this is going to be an event or if it will have an impact on the crypto markets. Are you watching that? What do you think is going to happen?
You know, I'm of the opinion that macroeconomic aspects right now are not going to affect the crypto market. I think there are too many issues happening inside crypto that probably it's overwhelming, at least, a lot of what would normally be, let's say, inflation hedge or the like, or risk on, risk off. So I am not necessarily of the opinion that what happens this week at Jackson Hole or virtual Jackson Hole will much matter in crypto. There are just too many things happening within crypto that's affecting the price.
Great.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Okay. So I'd like to first have our markets guest. Can we just, this is Octavio Marenzi from Opimas. Good morning, Octavio.
Good morning. Good to be with you again.
So the Bitcoin price is a little bit down off of it was just recently crossed $50,000 for the first time in 3 months. Can you just tell us a little bit about your short-term outlook? So there's been a lot of talk about how we're in summer doldrums, it's a bear market. Have we finally broken out of that, or do you expect sort of Bitcoin to go down again?
Well, I'm not. I mean, in terms of short-term movements, it's so hard to say. A 5% or even a 10% movement in Bitcoin or other cryptocurrencies is just par for the course. That's just what you have to accept in terms of the volatility in this asset class. So I don't know exactly short-term what's going to happen, but I think longer-term, to sort of hit the nail on the head in terms of the discussion of the Fed and what they do and what they don't do. I think that's going to be the underlying driving force in this. And I think their things look very, very positive. So we're not back to the highs that we saw back in April, about 64,000 on Bitcoin. So we're well below that. But it's been encouraging the past few weeks. And I think the real impetus to that has been the big infrastructure bill and the budget bill that's passed through the House, calling for spending about $3.5 trillion. And of course, a lot of that debt is going to have to be monetized, or a lot of that budget is going to be in deficit and will have to be monetized. And I think that will be very positive and an underpinning for Bitcoin and other cryptocurrencies.
Octavio, as we discussed just a few moments ago, do the macroeconomic fundamentals really matter right now, specifically to the Bitcoin market, when you have other things happening, movements and people buying and selling at a off market and in the OTC market, and things just moving around in general because of regulatory aspects to, let's say, Binance, et cetera, that's affecting Bitcoin price a lot more than, let's say, macro. Is that not the case, or you disagree?
I agree with you. I mean, there's a lot of factors driving it, right? You're absolutely right. The regulatory side, what's happening to Binance. I think the IRS coming out with stricter rules, all sorts of things might happen. The Treasury is looking at it very carefully. So there's all sorts of regulatory rules. But I think that sort of noise around an underlying trend. I think the underlying trend is up. And then the regulatory aspects of it go up and down and seem to change day by day almost. And there we see some volatility and changes day to day. But I think if you look at the space sort of fundamentally, there's, I think, two different aspects of it. There's sort of the cryptocurrency / Bitcoin area. I mean, Ethereum you can count in there as well. And then the other side of it is really sort of the blockchain technology, which has raised a lot of interest in all sorts of different areas. I think with some disappointment so far. I think a lot of people were expecting everything to be on a blockchain at this stage and the whole payment system to be there and the stock markets and everything. That really hasn't come to fruition, but I think the potential is still there to do something very interesting. And that, of course, is very positive for something like Ethereum, which is the biggest provider and underlying technology for blockchain. So I think those two things are quite encouraging overall. I mean, the regulatory side is a cloud on the horizon, but I think the future looks good. So I don't know what happens short term. I don't make short term guesses on these markets, but I think in the medium term or long term, things look pretty positive.
Octavio, we have a meeting this Friday with the Fed. Fed Chair Jerome Powell is expected to make some comments. Anything that we should be looking out for? Anything he might say that could have an impact on the crypto market?
Well, he could say a lot of things that would have a very profound impact, but I don't think he will. So I think what's probably going to happen, he's going to come out of the meeting in Jackson Hole and waffle. And he's going to say something will be in the markets for as long as it takes and will pursue the right policy at the right time. And ultimately, he won't have said anything at all. So I think that's what's going to come out. Just a couple of weeks ago, I would have sort of bet more that they were going to start to taper their bond purchases. I mean, bear in mind, they're buying $120 billion a month worth of bonds, 80 billion of treasury bonds and 40 billion of mortgage-backed securities, which is a huge influx into the markets. And cryptocurrencies have been benefiting from that a lot. Now, if you were to come out and say, we're tapering down, we're going to increase interest rates, we're going to stop our bond purchase altogether, I think that would be a pretty negative thing for the crypto markets overall. But he's very unlikely to do that. And I think the balance of the risks has changed, where now he's basically saying, well, we've got the Delta variant coming up. We've got a good excuse to carry on printing money on that front. We've got this enormous budget making its way through the Congress that's going to have to be financed in some way. I don't think the Treasury or the Biden administration is going to be very happy about higher interest rates. I mean, the Treasury is sort of at the breaking point in terms of paying interest on the current government debt. If that goes up a bit, that could be very, very negative indeed. So there's tremendous pressure on the Fed to just stay the course and carry on buying bonds and printing money to do that. And that, of course, is very favorable for crypto. Now, I don't think he'll change that. I don't think he'll say anything definitive or definite in either direction. I think he'll just sort of try and kick the can down the road a bit further. And like I said, a couple of weeks ago, I would have bet in the opposite direction that they're actually going to start to taper, but I don't think that's going to happen now.
So we see, of course, the S&P 500 is near 52-week, actually all-time highs. Is that expressing itself? Is that the market's willingness to take on risk expressing itself that way, or are equities and crypto both expressing concerns or at least a reflection of what the Fed and what our monetary policy is? So, in other words, are we looking at a just basic,
Yeah, no, that's I think exactly how I see it. I know you disagree slightly on whether the Fed is going to make a move one direction or not, but I think that is really what's underpinning the stock market and the crypto markets as well. So it's all this money printing, all this liquidity being pumped into the markets on a monthly basis is supporting the prices there, and that's what's underpinning certainly the stock markets. And the stock markets have also looked at this budget now and said, okay, well, that means the Fed is going to carry on printing money. There's no way around it. They can't get around that, really. They're going to have to do that. There's no other way to finance this. So that is it. I wouldn't say it's positive for the stock market. It's basically negative for the dollar. So the smart thing seems to be increasingly to get out of the dollar into anything else. So anything that's not a dollar but is denominated in dollars starts to look very attractive and is going to go up through the roof.
Octavio, I understand that you also give advice to the financial industry. Can you tell us what kind of advice you're giving right now, specifically as regards crypto, or what kind of advice you would give as regards crypto?
Well, we've given a lot of advice around infrastructure aspects of cryptocurrencies and blockchain and things of that sort. So people have come to us for advice on how to deploy crypto custody solutions, like how should we actually make this work to make sure that the Bitcoin that we hold is safe. That's still an area where a lot of firms have some big problems. We've talked to a lot of the exchanges and worked for some of the big exchanges in terms of market data on crypto and what they can do with that and how they can monetize it. So we engage on areas like that. So those are the kinds of things and projects we engage on with our clients in the crypto space. In terms of actual sort of investment strategies, I think we're basically saying we think it looks pretty good and a certain portion of the portfolio should be allocated towards Bitcoin and crypto. I think one of the things that surprised us a bit is that something like gold has not benefited from the upswing that cryptos have, and that's been basically what seems to have happened is Bitcoin has displaced gold as the inflation hedge of preference, and so that's been an interesting evolution to see over the course of the past year or two.
So getting back on that issue, though, about gold versus Bitcoin, and the fundamentals behind, let's say, Bitcoin and crypto, is gold really, has it really displaced crypto, or is it actually telling us more about the future projections of inflation than crypto is, and that crypto is just sort of moving because of the way those market fundamentals, and that maybe we should be paying more attention to gold if we're going to talk about the market's future their anticipated view of inflation? In other words, is gold really telling the picture, in fact, and crypto is sort of like a loud noise?
Well, I guess, yes, crypto is a bit of a loud noise, but I think it's an important directional indicator as well. And the markets overall, I think, are also a very strong indicator. I don't think it's even a question now of speculating about future inflation. I think it's here. I mean, we see fairly strong price increases year on year coming out, even on the consumer goods level. So CPI is going up and up. And I think that's going to continue. So it's not even a question, I think, of saying the markets are anticipating inflation. I think the inflation is here and it is quite clearly here. So the question then becomes, why has gold not come up and gone up with that? Because traditionally it would have. And I think the major reason there is that we simply don't see people investing money in gold to hedge against inflation anymore. It's also interesting because gold typically benefits also from any sort of geopolitical uncertainty. And we've seen that in spades over the course of the past few weeks, and it hasn't budged that much. So usually when there's some unpleasantness in some part of the world, the gold price pops up. That hasn't happened this time around either. So it seems that gold as a hedge against geopolitical instability and against inflation has sort of been knocked off its perch.
Thank you so much, Octavio. That was Octavio Marenzi, CEO and founder of Opimas. Coming up, checking in on Asia and an update on Ethereum. Time now for the daily forecast, a look at what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, August 25th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Coming up, Asia's first football NFTs are coming to Hong Kong. That's soccer for you Americans. Mooncakes for the Mid-Autumn Festival, a sign of crypto adoption in Asia. A field report from Hong Kong. And the September issue is one of the most revered issues in fashion. Vogue Singapore is launching an NFT cover. Let's get you up to speed from Asia to the world. Hong Kong's Resources Capital Football Club is bringing NFT collectibles to its fans, a first for an Asian football team. RCFC joins the growing list of clubs like Manchester City, Liverpool, and Bayern Munich that have also released NFT collections. Resources Capital Football Club is partnering up with Olive X. This is a digital health and fitness company whose founding shareholder is Hong Kong-based blockchain gaming unicorn Animoca Brands to launch the NFTs. Forecast News' Michelle Lim has more from Hong Kong.
Resources Capital Football Club, A local team playing in the Hong Kong Premier League Wednesday officially launched its NFT deal, which will see an exclusive NFT collectible card of the team's goalkeeper Lam Chun Kit, one of Hong Kong's top players, go up for auction. The winning bidder will also get special access to all of the team's matches for the rest of the season. Apart from the auction of Lam's NFT, other NFTs being launched include 50 packs featuring collectible cards of the other players on the team. The club says it wants to enter this new booming space as early as it can and hopes more people, especially the younger generation, will learn about sports through NFTs.
咁希望可以帶到個互動性咯，唔淨止喺 NFT 嘅發展啦，同埋喺運動上邊嘅球員同埋線下佢哋都可以接觸到咯。
It's still early days, but for the players, they hope that it will build their brand and take them to the next level. How do you expect your cards to do? Will people,
I think everyone will want my card. Why wouldn't you, huh? It's the acceleration, the pace, the shooting. Why not, huh? I'd say, I don't want to sound too big-headed, but probably one of the best cards in there. So
I think for our club is a very good thing. For our fans is a very good thing, and also for our players.
Olive X, the company that is developing the NFTs for RCFC, says these digital assets will help build excitement around the team and generate additional revenues.
Football clubs are always looking for more ways to monetize other than just ticket sales, right? Especially in the new COVID world where people can't. So they're thinking of new ways to expand. Obviously, they'll need sponsors, but NFT, I definitely think is a way, and especially in Asia, for them to support their clubs. So we definitely see a trend in there.
A trend the team and the developer hope will score points with the fans. For Forecast News, I'm Michelle Lim in Hong Kong.
Staying in Hong Kong, where the love of crypto is working its way into all aspects of life, one vegetarian food concept company has jumped on a new way to mark the Mid-Autumn Festival. Crypto mooncakes. Forecast News' Carolyn Wright has more from Hong Kong.
Hong Kong-based vegetarian food concept Esker is offering a box of 4 assorted crypto mooncakes for 350 Hong Kong dollars, or around $45 US.
I'm obviously very much into crypto, and I think the space is amazing and growing fast. So I thought that, I also love mooncakes, so these two put together, I think it'd be quite neat, and there would be quite a niche market.
But you'll have to get your skates on if you want to try them. The tasty treats are only available until September 21st. For Forecast News, I'm Carolyn Wright in Hong Kong.
Get ready to strike a pose. Vogue Singapore is launching an NFT cover for the all-important September issue. The winning bidder of this digital-only dress by French fashion house Balmain, which literally is set afire digitally at least, will receive a digital certificate of authenticity and get to wear it in the fashion gaming app Altava. And finally today, I'm excited to share a little news from us at Forecast News. We're launching an exclusive new podcast special series called The Future Rules. Powered by the Filecoin Foundation, I'll be hosting alongside top legal mind and Filecoin Foundation board chair Marta Belcher. We're going to be joined by some of the most renowned names in the industry to dive into the ethical and legal issues that future technology will raise. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
Welcome back. Let's check in on Bitcoin again. So we have the CoinDesk Bitcoin price XBX index is currently trading at $47,000, $47,744. It's down almost 3% over the past 24 hours. The CoinDesk Ether price ETX index is trading at $3,146, down over 4% over the past 24 hours. And the DFX, CoinDesk's new DeFi index, is trading at $657.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Now we're going to move on to Ethereum. It's been about 3 weeks since the Ethereum hard fork. The price of Ether has shot up and has remained above $3,000. But now it appears to be a separate issue with the network's most popular software client, Geth. Our in-house Ethereum expert Christine Kim now joins us to discuss these and other Ethereum-related developments. Welcome, Christine.
Thank you, Emily.
So let's start with the hard fork. It's been nearly 3 weeks since this much anticipated Ethereum hard fork. Where are we? How's it going? What are the most important developments we've seen so far?
I think one of the most important developments is that we're seeing a lot of users and businesses adopt the transaction format that is best suited for the upgrade. Backwards incompatible hard fork. A backwards incompatible upgrade, also called a hard fork, requires everyone to update their software, update their nodes. You can think about nodes like computers, and that's a hard requirement for everyone to do at the same time. But when it comes to the front end user interface, UI, UX of certain applications, that was an optional upgrade. If you wanted to use transactions formatted in a way that doesn't leverage all the benefits of the London hard fork and the code change EIP 1559, you could. And we were seeing that after the first couple of days, the number of transactions formatted in the old way was pretty high, like 90%. Nowadays, we're seeing that almost half of transactions being processed on Ethereum are starting to use the EIP 1559 format, which is a healthy sign that the update is something that users want and is something that users are benefiting from.
Lawrence,
sorry about that.
One other really interesting.
Oh no, go on. Yeah.
I was going to say that one other interesting part about EIP 1559 is the amount of ETH being burned. While the amount of ETH being burned hasn't surpassed the amount of ETH being issued, we are seeing that mechanism of ETH burning having a positive impact on ETH price. As of late, as Emily had mentioned, since the hard fork, we have seen quite bullish trends with ETH in the markets.
Yeah, so I was actually, my question had to do with, we were talking about upgrades just now, so something happened with Geth, right? First of all, explain what Geth is. It's not just the town where Goliath came from. What does it do? And what happened specifically in Geth?
Yeah, so Geth is one of the most popular software clients of Ethereum. These software clients, there's, I think, 5 active ones. Is the software that users use to connect to the Ethereum network. So if you wanted to run your own computer or node and connect to the Ethereum blockchain, get information about transactions, send your own transaction, become a miner, you need to download this software and use it to connect to the network. Currently, around 75% of nodes on Ethereum run Geth to connect to Ethereum. So Geth is a very popular software that people use. And 2 weeks ago, on August 18th, it was announced on Twitter that there was a high severity security issue in the latest release of their code. The warning was, we are going to issue a hotfix to this high severity security issue next Tuesday. Everybody, please be aware and be prepared to upgrade your software. This only impacted Geth users. So if you were using a different client like Open Ethereum, then you weren't affected. The details of what exactly the high severity security issue was not released on August 18th. But on Tuesday, this past Tuesday, when the hotfix was released, there was a little bit more information shared about what that vulnerability was. And developers had explained that vulnerability could have caused a node to no longer be able to process blocks on Ethereum, which would have been an extremely high difficult issue for users. So after that announcement was made, there were certain Ethereum infrastructure providers, such as Infura, that publicly announced their support for the new Geth release. And on the same day as when the hotfix was announced, there was also an announcement made that $1.5 million would be donated to supporting Ethereum software clients in their development and in their continued maintenance.
So that Hotfix announcement is different than other Hotfix announcements in the past. Why so?
So the way that the announcement was communicated is different, but the nature of a hotfix and the nature of a high severity bug being found in a software client such as Geth that part is not different at all. So the last time a fix was issued for a bug in Geth code, there was a deliberate lack of communication from Geth developers about the severity of the bug to its users. And the reason why that happened was because when there's a security vulnerability, you don't want a hacker to take advantage of that security vulnerability. So by not talking about it publicly, you're giving more time for anybody who's using your software to update their nodes before a hacker, catches wind of the open vulnerability that could be exploited. But it turns out that when you don't emphasize how important an upgrade is, many people just won't do it. So due to the deliberate lack of communication, in November 2020, there was a temporary chain split that was caused on Ethereum because not enough users upgraded their nodes and weren't aware of how important it was to upgrade their software at the time. This time around, Geth developers have learned and they're trying it differently. They did announce very publicly that this is something that users need to do immediately to keep their node working properly and keep their operation safe. And so far, I think that the reaction to this kind of transparency is working out well. And as far as I've heard, I haven't heard of a hacker taking advantage of the high severity bug that causes a node to no longer be able to process blocks. Over the coming weeks, I believe that the Geth team will publish a more detailed explanation of the bug as soon as they know that more users have upgraded their nodes.
Christine, one last question. There's a report this morning that Budweiser has purchased a new domain name, beer.eth. Why would anybody do that? And is there any kind of larger significance here other than just a marketing thing?
Yeah, so I'm going to take cues from the earlier announcement by Visa that they also purchased their first CryptoPunk NFT on Monday. And I'm going to think that these companies, they're really not doing it as an investment per se, like doing it to make sure that they're generating more money, like that this NFT is going to, betting on the fact that this NFT is going to rise in value 3 times, 5x over the next month or year. I actually think that the biggest reason is to get involved and experiment and start to understand better the NFT market, because these companies and these businesses believe that NFTs are going to play an important role in the future of retail, social media, entertainment, and commerce. This is directly from a quote that Visa's head of crypto said when he was talking about his NFT purchase. And I think it makes sense. I think we're starting to see businesses start to experiment with NFTs, see how they work, how audiences respond, and if it's a good way to start to, like you said, market their products. But I think it's the early steps of an experiment more so than we shouldn't think about this as an investment, which some retail traders and investors might think of NFTs as.
Thank you so much, Christine. That was Christine Kim, CoinDesk research analyst and Ethereum expert. Coming up, the latest from the regulatory front with CoinDesk Global Policy and Regulation Managing Editor Nick Day.
CoinDesk Indexes, the market standard for crypto assets since 2014. The CoinDesk DeFi Index is our latest product and provides insight and exposure into decentralized finance. Our indexes are key for investors looking to access and understand crypto markets.
The CoinDesk DeFi Index is the best tool for a diversified approach to this compelling new category of digital assets.
The CoinDesk DeFi Index, measuring the investable DeFi market.
Time now to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk State of Crypto newsletter. Hey, Nick.
Good morning.
Good morning. All right,
Hi.
Nick. Well, we've definitely spent a lot of time talking about the infrastructure bill, but apparently there has been some news on that front. Can you just give us the most recent update?
Yeah, yesterday the House of Representatives did vote to consider the current version of the infrastructure bill, meaning the version that has the unamended text of the crypto tax provision. On September 27th, it's going to be put up to a vote, but it looks like the House will not allow any amendments prior to that date. So, unless something very significant changes in the next month, we're not going to see any amendments allowed for the crypto tax provision.
So it's kind of with these efforts and this ardent lobbying on the crypto industry, it didn't work this time. What does that mean?
Yeah, and basically, it's going to be up to either looking to amend this through another bill later on, which is something that a couple advocates have suggested, or seeing if there's any leeway at all, to pass a new rule that would allow for an amendment within the next month. But yeah, as it stands, all that effort, really what it did was call attention to the issue, but without meaningfully changing the final result of it.
You would think a lot of angry tweets would have changed things, but here we are. There's also a sudden withdrawal of a couple of Ether future ETFs, futures ETF proposals from Van Eck and ProShares. What's that about, and what does that tell us?
Yeah, so the ETF space kind of seems to be heating up again a little bit. We're seeing, Van Eck and ProShares, as you mentioned, applied for and then withdrew Ether futures-based ETF applications, which could suggest, I think it feels almost like a conspiracy theory, but like the most likely scenario here is that the SEC got in touch with them and said, we're not looking to approve an Ether futures ETF right now. That seems to be the most reasonable explanation for the timing of these withdrawals, but at the same time, we're seeing a huge surplus of Bitcoin futures ETF applications being filed. And that's because, we've talked about this before, but SEC Chair Gary Gensler said that a futures-based ETF might be, something that the SEC would actually approve ahead of a, spot ETF. So it kind of seems like, the SEC might be leaning towards actually approving a Bitcoin futures ETF. And they're trying to ensure that they're not distracted by an excess amount of other ETF applications that they would also have to weigh in on. And it kind of comes down to which laws that the applications are filed with. These are all 40 Act applications that we're looking at right now through the futures ETF. So I think the overall message seems to be that Bitcoin futures ETFs are possibly definitely on the menu for this year.
Thank you, Nick. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. He's also the editor of CoinDesk's State of Crypto newsletter on CoinDesk.com. That's it for First Mover. Join us at noon. Thank you, Lawrence Lewitinn, Managing Editor of Global Capital Markets. I'm Emily Parker. Coming up at noon is The Hash, and then we have All About Bitcoin at 3 p.m. You're watching CoinDesk TV.